This is Eric Mwathe with Mwathe.com for October 21st, 2008, half an hour before the market open. Markets are closed slightly lower. So let's get back and look at the charts and see what we have in front of us. This is a 1-year daily for the Dow. And on this chart, what I'm going to discuss is a couple of, I think 2 weeks ago I mentioned to you, or a week ago, that the MACD usually does not cross over at the first attempt. Like you can take this instance here where there was a crossover attempt that failed, or the early part of the year we had a crossover attempt that failed. And this is for this MACD setting, the 12, 26, and 9. It rarely ever just crosses over. So usually you need this line to drop lower. An attempt to usually fail. Markets or an instrument is going to head lower, and at some point you get a failed attempt, and then you come lower, and then you break out above that. Now this crossover usually, given other factors, tends to be a more reliable crossover. Now, so we know just from that definition, it's very difficult for this market to just head on to new and recover recent losses. More than likely it's going to either settle down around this level, or it's going to head lower. Now, in my prior video I also talked about the back test that the market's been doing ever since the market clipped below this RSI support line on the Dow, or actually on most of the major market indices on the daily. Once we clipped through that right here, this is early part of October, is when the market right here is when we actually started the drop. Now, so this line is a significant line, and we've come and we've back tested this line twice, and it seems to me like we are stalling. That's a bearish signal for the market short term. Now let's look at the NYSE daily comp, and again you see the same back test. It's been hit twice, and we seem to be stalling. More than likely now we head back, and more than likely we might be retesting these lows made I think a week ago. The Dow lows around 7,700. If we hold, that might set us up for a good bounce going into the later part of this year, but we still need to see that happening. For now, I don't know how low we are going to go, but a retest seems to be in play for now, given the charts we have in front of us. Now, most of you have been hedging themselves with gold. This has not worked out as per the prescribed notion that when markets are weak, gold is a safe haven. As far as I can tell, without going too much into details, is that gold is really losing ground. The RSI is already making new multi-year lows. This RSI is now going back almost 7 years, actually 6 years, making new lows. Now, if the monthly RSI, this is a monthly chart, if the monthly RSI clips through 50 this month or next month, you better be careful if you're holding gold, because gold is the last commodity standing in this bubble. Usually the last instrument to break falls the hardest and the fastest. That's a classic. The Nasdaq was the last major indices to peak in 2000, March 2000. The Dow had already peaked a couple of months before, but when the Nasdaq finally cracked, it cracked in a big and fast, ugly fashion. So my thesis right now is gold needs to either hold support on this price channel trend line on the monthly. If it can't hold those levels, and if the RSI clips and closes below 50 on a monthly closing basis, you can bet your bottom gold, if I can say that. You can bet your bottom dollar, because the dollar is actually crushing gold at this moment. My target for gold is probably initially going to be under 700. If that doesn't hold, my price target is 550, and that is going to happen very quickly, probably in a couple of weeks, if you can't hold support on the RSI. Now, if you want to know what happens when an instrument clips the 50 level on the monthly chart, take a look at the Dow Transport. The moment it clipped through below 50 right there, it had its steepest drop ever. Or I mean, as far as you can go, 17 years, it's the biggest drop. So clipping below 50 is never a good thing. So you gold bugs out there, be careful. Something might be lurking around the corner. This is a UUP weekly chart. It's a very beautiful, very, very strong chart that also convinces me that gold might be in trouble. This chart is very strong. The RSI is moving to unseen ground before everything. This is a picture perfect breakout. Be careful if you're a gold bag. Now, this is a UUP monthly. Again, this is a picture perfect breakout. Clean chart. There's no messy price fluctuation. This is a clean breakout. Tells me that the potential for higher prices in the US dollar is very high. So now let's go look at some of the ideas we are considering for now. And we are looking at here is